Good afternoon, everyone. This is Fari Hemzi. It's 3 minutes after 5 on Wednesday, 4th of May, 2022. I'm sorry we had a bad link out there. And hi, Dennis, how are you? We had a bad link up here. I didn't know that. There was if you had clicked on this before, it would go to a webinar has ended. Just a quick explanation. GoToMeeting had a server issue. Somewhere in the disk array, they had a failure. A number of webinars, these webinars can have numbers on it. I'm not sure they're sequential or what, but it was a 9-digit number. They went bad. One of that was us. Okay. So we restored it. They were on top of it. We restored it. We set up a new. We had to set up a new recurring webinar. So number changed. They brought the people who were already in it. Remember, they will be this setup. It's called register once, because then it carries you over. Minus 12 people. There were 12 people who somehow, hi Tom, how are you? Did not make their cut. And they look at now they're trying to authenticate. Something I requested day one, back in 2008, saying, when people register, what if they put a bad email in? They don't know it's bad until right before the webinar, they're not going to get their invite. Why don't you guys set up like we do with you come into our setup and go through, you want to set up for MSA, we send you a confirmation. You got to go to your webinar, to your email, get it, say activate, then it's good. Simple stuff. Everybody does it. This way we know the email you're putting is correct. If you don't get a confirmation from us, that means your email you may have entered wrong. Why don't we filter? Why don't you set up a filter, and you can have a database of all people who have done, and you can do it by, and not mix people, by organizer email. Like ours is admin@hamzianalex.com. They say it's too complicated. What? Database. Come on. We have SQL, we have Oracle. They're using Oracle. I mean, you could have any database you want. That was just BS. Well, they just now found out too many complaints and too many spams and all that. Now they're trying to filter. 12 people did not cut that. I don't know what their categories are. All I know is that I know a couple of guys. Those guys are real. Those are good emails. Anyhow, so if you get an email that says, hey, you need to re-register, that's why. And most probably you didn't get an invite today. These have time on it, and one day to go, 1 hour to go, something like that will remind you. Anyhow, that's that. So that was one problem. The other one is that we have a webinar tomorrow. It's for funding of ORB. For those who are, they're early in their funding, they're early in their setup, and they want to test this thing at no risk to them. And I found a firm out of Austin, Texas, who has been doing it. They got about 30,000 traders, so it's fairly decent size. And they'll be here tomorrow. Okay, so all you have to do is click here. They'll take you there, and you sign up. If you've already signed up for the NQ webinars, it's the same list. It adds to that. And then after that is reverse back. This goes away, and this becomes the name for our open house, which is once a month. Okay, we're doing our last free trial, but this is mainly for those who have not had a chance. I know a number of people have come back and said, can I try it again? Of course not. That's not fair. That's not in the spirit it was done. One gentleman had a medical issue. And I know that's real. I told him, don't try to come back. Take care of your medical stuff and come back later. What's the rush? Anyhow, we had an excellent day today. Comrade Powell hit it out of the ballpark by simply saying on the cue from the balloon guy, this is on CNBC right now, Steve Leisman, that are you going to do 75% or not? And he says, no, it's off the table. That's all she wrote. It just, and you saw Admiral Tico, I don't know if you follow him or not, came back and gave 2 targets. Both targets were taken out. So on NQs, yeah. Anyhow, so we thank Admiral Tico. Also, we thank him for our call. If you go here's the most recent update. Yeah, 4:33, 4:43 today. Notice when he went long, 4:55 on Monday. These are on closing basis. So we've gone up almost 150 points, 145 points since then. That's why he's admiral and you and I are not. Remember, as he says, this is my market. You guys happen to just trade in it. So the kid has done well. Anyhow, let's get going here. Let's look at our econ calendar, see what's ahead of us. I don't know what ADP came in. Frankly, it's been that kind of a busy day. So early in the morning, boring, but we stepped out to grab breakfast. By the time we got back, this was it. Oh, morning. That's on the Monday. That's on the Wednesday. Sorry, I'm just having a little piece of a bakery. That bakery. Yes, I guess bakery. It's a scone. Oh, as you know, I eat here. Time is bad these days. 455 revised up. 479. Consensus 398. This is probably data point for the Fed, who's slowing down. You saw GDP to be negative. I don't think the CPI and PPI are going to tick down, but at least they're going to hover. They're not going to explode. That's next week. What's important this week is a non-farm on Friday. Tomorrow we want to take a look at jobless claim. It's going to be in line. I'm not worried about that. So the announcements. How did the international trade come in? 89 came in revised, no change, tiny bit. Consensus was 106. Wow. Yeah. We're producing less and importing more. Right. Retail sales are good. They're going under spending here. I'm putting on a credit card. Yeah. Okay, let's talk about Friday. That's a key one. By the way, I do a little game right before at 2 minutes to go, 3 minutes to go. I say, "What's your number?" It's amazing how the numbers come in. Yeah, it's amazing. Hi, Christina. Welcome. Let's see. Anybody else I know there? No. Hi, B. Garati. I'm sorry, I'm having a hard time. My bad. It's my fault. Okay, non-farm on Friday. Prior it was 431. Consensus 400. Yeah, kind of in line. 3 to 5. All right. Unemployment rate is going to be, as I think Chairman Powell gave a hint, we're going to be at low rates for a while. That's why we have. If you look at Jolt, actually, Jolt's report, which is openings, it's 2 to 1. Yeah. We just don't have the right skilled people. And we have really messed up on our immigration, on the qualified people, on H-1Bs. So, but I'm not going to run Washington. I'm having too much of a good time here in Florida. Let them worry about it. But plus, you don't want me to run Washington. I'm too much of a fascist for that. So they won't let me in. Payrolls 426 last time, 390 now, 430 to 340 to 455. By the way, the best guy in this area is the head of Tea Party, actually. Yeah, Rick Santelli is very good. He usually throws the number out last before the number comes up live. He's usually one of the best. I just wish him that he smokes less cigarettes. You always see him outside the CBOT smoking right before his TV hit, 38,000 on payroll. I'm going to pay attention a lot to the manufacturing payroll, as I always do. That's crucial. And also, I don't know what they don't report here. I've told this guy, we're on LinkedIn together, saying that you should also report construction. Well, our problem right now is construction. The reason the rents are so high because we're about 4 million behind. We're 4 million shorts in the on the rentals, multifamily rentals. That's why. Of course, right now, the materials are so expensive. That's a problem. Of course, anything that goes up like this, 50% a year, is not going to stay there. It's going to come back down. Talk to me 2 years from now. Hopefully, 2008 taught a lesson to everybody that real estate doesn't just go up. And we're beginning to see some things soften up here. If I understand what the Chairman of the Fed, Jerry Powell, said today, he expects another 2 points or so added to the long term. Okay. I think mortgages are at 5 right now, the 30-year, 4 something. So this is because 3 is the what do you call it? 3 is the Treasury. Nobody's got U.S. Treasury credits. Nobody, right? It's payable in dollars, and there's no risk of default because it's a reserve currency. Until that changes, there's always demand for this. So we're at 3. Mortgage at 5. He's thinking there's going to be another 2 points to go. So if I understand this right, it would put the long-term mortgages around 7. Let's say 6 even. We haven't been at 6 for a long time. That's going to change the market. No, we did not do that. We sent a message out and we said Monday night we went long. We did not give a trade because we have FOMC in front of us. We may be smart, but we're not stupid. Does that make sense? This is a freight train called FOMC. We don't bet on big numbers. That's not good. We see what the market responds, then we get it. So, yeah, what we did, so we gave a guidance and we went long. The email went out. The email was sent to everybody Monday right after the close. And the result of it was but I've not posted it on here's what I've not done. Okay, I've been very busy. And we have not posted in the archives. We will. If you go to the archive, it doesn't show that. We usually would add it down there, that there was a change of bias. We haven't done that. But emailed out, I can find it for you. 1 second. And I'll show you exactly what we said. So give me a second. Let me go over here because I don't want to open all my emails. Give me a second. Let me find it. What? Okay, there we go. Timer Digest. Oh, there we go. Here's Timer Digest. I keep them. We have recorded your buy signal for the stocks. It went out at 5:32 Eastern. He responded at 8:39 that night. Okay, they are around. They're keeping track of things, but we're not. But they're not running their newspaper, their publication. So we went long, but we not give a trade. So people who are on the cash side, I don't know if you're PMT Pro or PMT. If it's on PMT, they just go boom. PMT Pro has this option trade on, which we nailed last time. This was a short setup, and we did not give one out. Why? Because I know if I have FOMC coming. Yeah. Remember, we do this as what I call as warranted. I don't go by quotas. I don't need to. For your timer of the decade, I call the shots. If I'm uncomfortable, I'm not going to go there and go crazy. Because I've been wrong before and yet made it to timer of decade. That builds your metal. You'll find out what when you should go to the ledge, and sometimes you have to pull back. Ahead of this kind of a move, that could be easily been wrong to the other side and get killed. Or market, or for that matter, Liesman may not have that question today. Remember, this rally that we saw here, let me show you something here on there. You want to see what we did. Here's our OTF system set up. Okay. Look at this rally. You know what this was? When Liesman asked the question. A few minutes after, what time is that bar? 14:35. So here, let me talk about 6 minutes. I'm sorry, maybe it was a little bit after that. But it was somewhere in here because it's not time-based, okay? But you could really see it just took off. Because he asked the question, it was, hey, is 75 basis points still on the table? The moment chairman said no, changed the ballgame. Now, what if Leisman had not asked that question? Remember how we opened? If you go to cash only, I mean, don't get me wrong, Dave. That's a good question. No, no. That's right. No worries, no worries, no worries. Yeah. But here, no. It's a good question. Let me give it let me give it a proper analysis that it deserves. So why don't we come here and make that into 15 minutes? Okay, just for fun. You can see what happened. Okay, so you at 2 o'clock. I'm saying no. There came out at 2 o'clock. That's 2:15. So the news is out. 2:30 starts talking. The first tranche it drops. I mean, first delta of time it drops actually. Went this low, went to what negative 1.61. But what caused that reversal? You get an outside bar. Is Leisman asked me that question. Somebody else could have asked that question. I'm saying Leisman would. But I'm saying, what I'm thinking is, it's been reported in the past that he's one of the inside guys of the Fed. They give him a few things he's supposed to ask. If he does, he's a good boy. He gets a good seat. And also, there's been time he made ass out of himself, and they told him that take a break for a while. I have a very good friend. They kicked him out. He asked very good questions from Ben Bernanke, and he got kicked out. So the question was good. Timing was not. You don't embarrass the chairman. You don't. If you want to be invited back. And they got him out. I forgot his name. He's an Italian fellow. I can find him. He was working for Wall Street Journal. Yeah. And they kicked him out. So Leisman saved the day. Somebody else would have had that same question too. But Leisman asked it first, and boom. When that green light came, we just loaded. We just loaded up. Boom, 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 boom. And it was gone. Now, I'm not willing to go into this flat area like this. Okay? Remember, reversal on Monday. And take a bet on options. We could get evaporated instantly. Like we did a couple of months ago. Remember one trade we got evaporated? Within a day we got evaporated? Listen, one time is your fault. Second time is my fault, right? Something like that. So now I got to repeat that. So I was a little bit cautious. But now I know what to do. Why? And look at, see, we put a couple of options on. Nancy put one on Monday, put on one yesterday. And then those are options. And there were more earnings related to. And so she's sitting pretty. She's kicked ass. I'm proud of her. She uses the same software, obviously. We use the same scanner, the watch list. But that's beside the point. But anyhow, that's why, David. That's all. I'm just trying to be a little bit. Remember, I got a lot bigger pot in my hand dealing with different things. So I want to go a little bit more accurate work. Maybe less gain, but more accurate. Yeah. Which in the long term, more results, better results. So anyhow, with this number ahead of us, now I'll put something on, but minor. I think this number is not going to be that crazy. I think they already know that. The Fed and the Oval Office will know tomorrow this time what those numbers are. They're done in cells, so no one person at BLS knows what the total picture is, just like CIA, and gets reported in. So the first view is going to be, and they're not going to have PPT around now. Punch protection team. Why? We're too high up. This is not 2008. This is not 2020. This is we're higher the market. So it's going to be president and it's going to be Powell. They would know it by this time tomorrow. But I'm thinking that they have a pretty good read what that number is going to be. At least Powell does, and it's got the intellect for it too, and the background. So I think that number is going to be mute. Well, I don't think this number is going to be. It's not going to be big. It's not going to be big. So it won't interrupt. We'll put something on probably tomorrow. But I want to make sure Jay Powell is out of the way. I can deal with non-farm. I can't deal with the Fed. You can't find the Fed. So that's one of the first things I learned. Read Marty Zwick. Marty Zwick. That's my first book. It's somewhere in here. I think Tico has borrowed to read it. It talks about how do you mark Fed movements versus advanced decline. No. I actually programmed it. It was my first program for the market. It was an Apple II with a thermal printer. My poor brother, which is he's not poor actually, he's actually done very well now. He was a guy who was head of second, second man in command at software engineering. And by the way, see that S? That's his. HTTPS, we get a lock on. See the lock? That's his. He's got a patent for VPN. So he's not poor. He's doing fine. But at that time, he begged me. He was a teenager. He says, Farry, I need a computer. If you buy the Apple, I'm coming from school early. He was in high school. And you were working at Northrop to nighttime anyway. By the time you get home, I got all your reports ready. I'll program it. I said, how are you going to program? How do you know? He goes, I'm going to learn. I mean, he went on them. But he did. He delivered. He taught himself how to program himself in Apple. And we got it running. So we take the data from Wall Street Journal, input it in, get advanced decline line. Remember, there was no internet, there was no live data. If you went to, let's say, Merrill Lynch, they had Cotron machines or Bancaroma, and those were fed by expensive cable. So, no worries, Bernard, no worries. So, long story short, when I would get home, I had the latest thing. Web data from yesterday. They get published from Wall Street Journal. And then we would mark, with the software that he wrote, we would mark 3 ups and 3 downs. 3 fed ups or 3 fed downs. Hey, Alex, how are you? That would set up the call. And then I would make a call. Hey, we're going to be long, we're going to be short. So, past silver crash, which was March 28th, or 27, I forget, of 1980, I tooled myself for this day. I said, I got to do some market timing. And there was no discussion back then, you can do it or you cannot. I really didn't care. I don't, the comment that you cannot market time, that's statistical comment. I need one person to do it, that's me. If I can get myself to do it, who cares what the statistics are? So it's like you can be hit by a thunder strike you. Well, the odds are very low. Yeah, but if it hits you, you got it. I know 2 people have. That's not pretty. So. Long story short, I also look at average work week. So you want to take a look at that. Participation rate is really, really, really messed up now. It's just been really. Post 2008, it came back up. But since the pandemic, that whole pandemic issue has warped this data. So I don't go with that. But again, top line, headline, payrolls, private payrolls, yes, but mainly manufacturing. I also look at construction. Now, if you go to BLS, you can see it. Just give it a little bit of time, a few minutes, because you don't know how many people are hitting that website at that time. Yeah. So, 4 or 5 minutes later, another machine, I'm looking at BLS, reading the report immediately, bls.gov. But that's Friday. Remember, we make our money 3 days. Literally, it's 3 days. FOMC, non-farm, and expression. That's what it really is. So 2 of them are in the morning on Friday, 1 of them is on Wednesday. Now, in special situations, could be over the weekend, like a buyout and have you. For example, last weekend was at Twitter by EM. Yeah. So anyhow, that's where we are. So that's our numbers now, and Admiral did not do too bad. So, and now we've made some mistakes there, but remember, by the way, this is when we are in the market. If we're not in the market, this doesn't move. Why? Because we're not in. This is how Time Digest ranks us. This is built to measure us against Time Digest, and so far we made one mistake they had, because we have to keep track of it. People, it comes out of Excel. Somewhere before somebody says, "Can I see it?" We gave him the data. I told Matt to extract the data, give him the data, not the calculations, not everything else, because we've been hacked before. But data, sure. If you call Time Digest, they'll read to you. It'll match as ours. So again, this works when we're in a position in the market. If we don't go in the market, sit flat like we did 4 or 5 days, this doesn't move. What we're trying to do is how they rank us, which is based on when you're long and you're short, okay, and how much you went what percentage you gain from your last call versus the others who do that. So it's not versus SPX per se. It's versus what others have done. But anyhow, we don't know the rankings now because they're not publishing anything. But as I saw you, we send out our emails per their request. So I suspect at one point they're going to bring it back. Maybe they're working on it right now. But I also noticed even their website is down, so not good. But they're very prompt with their answers. Okay, so that's the calendar. The following week, we're going to hit CPI, PPI. We're going to pay attention. After that, we have expiration. Then after that, we have GDP. That's the cycle we're always in. Any questions now? David, what apologies? Forget it. Forget it. Have more tea. Let's go through charts. Admiral Tico says, have more tea. Yeah, don't worry about it. Okay, here we are. We were coming down this corridor, -2, -3 sigma. As you know, that's one of my favorites. I made a mistake here. I wasn't going to do that again. I said through some pain, but intraday, remember, we got stopped out on the options. We get stopped out. We lose a little bit because of defined risk. Throughout the day, if you chat in our chat rooms, I'm not going to sit here and be short on NQs. My head will be handed to me. I have to file bankruptcy. It's not going to happen. Okay? So, easy, Gary, easy. Jesus. So, as we turned, we started putting more option trades on. And the key here was, as we've discussed last week, the inability of the market to get through 200-day. Okay? We're still on a death cross. 50 is below 100. And then we dip below center line, the yellow line, which is the center line. And now we're looking for what? -1, -2, sigma. We fell in there. A couple of times we went excessively after that. We started watching it, hit 3 sigma, almost to a tick. Came back. You can see what's happening underneath. Now look at the divergence. That was the divergence here. I'll show you more charts. You have, obviously today the change was big, but you see it getting closer and closer. This shape is crucial. Your eyes will get used to it. Remember, you have to make a decision like this. As bars come in, not full picture and say, "Oh, I would have sold here." No, you can't do that. Your broker won't take your order. But as each day comes in, it would be a good idea to take a look. All right. Canaries. Big day today, obviously, went to 50 bar. Let's see where they go to and stop. This one went to center line. That's Russell. Russell is going to tell us what NASDAQ is going to do as a lead. And look at transportation. Kicked ass. Went through both levels. That says we're still going to continue to go up. Not necessarily on Dow, but on S&P. S&P is a better measure anyway. So stay long, young man. Stay long. D-Trenders. Remember, I got to be out of here at 6. So plus I'm going to give you guys a chance to have questions. Okay. Yeah, I did. It's the first time I changed my bias in about 4 months. So, okay. D-Trenders. 1, 2, 3. No. 3, 4. Wow, look at this. 5, 6. 6 out of 8 are negative. Okay. Obviously, transportation is leading. This makes sense. They're both positive. 6 out of 8, yeah, it's positive. Remember, the key is when they're all negative. And we were there for several weeks. And I said, guys, each Wednesday, this could be a close call. When all 8 stay negative, it's a near snapback. It's a rubber band issue. It's a mean reversion. Okay, SP1 Momo. Somebody asked me, I need to have this chart, and he's a PMT member. He's been with us for years. I said, I can't, because these two are not plottable on your machine. They're locked to my ID. They won't plot. And he said, well, that's what I want. I said, well, I want an island with 5 blondes. Nobody's going to give it to me. So it's not what we want, okay? So this is not going to happen. But here, at least you get a chance to take a look. You see the divergence there versus that? If you read my archives, you see how many times I've talked about that. When the younger brethren, Momo, versus SP1 goes to divergence, lower low, higher low, it's time to go. It's a reversal is coming. Same thing to his up to up. This wasn't that. But you could find, if you look around, you'll see. We may have it here, yeah. Yeah, but that's not close. You need higher. It's not a good setup. Here it is. There you go. There you go. You see this? Yeah. I just nailed it. Now, no indicator always going to work. If you're expecting that, you're an engineer. Go back to engineering. This is probabilities and statistics. It's not going to work always that clean. Plus, there are issues that go beyond just charts. For example, just in case, my background, oil, I did a lot of work on oil at college. My advisor was Charles Izavi. Probably knows more about back in the 70s and 80s how oil OPEC operated than anybody alive. Came from Oxford, and then he was teaching at my school. And then my background, because of my dad and myself at Northwest, so forth, military industrial complex. So I could read, I could understand what was happening in Ukraine. And of course, I was one of the early ones who said, watch out, Russians' hardware is junk. Exactly those words. Russian hardware is junk. Now you see what's happening. Now they begin to find out from analysis that what's wrong with the T-72 and T-80 tanks. So, how did I know that? Well, we read some reports back then of what was critical back then and the analysis, and mainly came from Langley, CIA. So those were very classified stuff. Some of it, sometimes most of it was redacted, including even some stuff that George Herbert Walker Bush 41 wrote as the head of that agency. So having a blend of that experience in real time helps you better navigate these tough markets. All right. We're not getting a big, huge volume spikes yet. I wanted to see a little bit higher. Let's go here. Not volume, I'm sorry. Advanced declining numbers. Yeah, new highs, 52 weeks high. A little bit still too low. Okay. You see how that was? Yeah. These are. I mean, 220 seems to be a good number over the years. This was an aberration. We're not going to go there. What was this number? 239. There we go. Historically, I've seen, if you go back to 2008 and so forth, 220 was a good one for weekly highs and lows. Remember, each bar is a week here because we're running weekly chart. So this tells me we're not done yet to the downside. And I've had that thesis on that this is a dead cat bounce. We still have some flushing to do. If you look at also the Lowry's work, it says we didn't flush on the bottom either. Norseman is a good friend, both Natvik, and he still was, as of even today, said that he wasn't convinced that. No, I understand it's not the low. That I agree with him. But for the time being, we're running up. I'm hoping, for his own sake, that he lightens up. I think he has some shorts on, but I don't know. I'll talk to him. Yeah, he's a good man. Lives down the street. Yeah. Loves corned beef on rye. Yeah. Seriously. A couple of good delis down here we go to. All right, VIX. Okay. So Jeremy, Joseph Stiglitz of Wharton came out, Professor Stiglitz, came out late Friday. I didn't catch it, but it was on CNBC, I'm told. And he said he wants to see a couple of 40 prints on VIX to flush out everybody this week. Sorry, Professor. Haven't seen a very rich economist in a long time. So the moment he said that, I think Nancy called me and said, "Patty, Stiglitz saying that." I said, "That's a bottom. We got to go long Monday. Just to see how Monday looks like. But we got to go. I mean, somewhere in here, we got to see a low that's going to be rejected, and that's our low. Well, let's go back. That was a low. This is Friday. By the way, that low was called on the NASDAQ side by Admiral Tico. To the T almost. I'm saying this low. To the T, okay? But that's Admiral Tico. So Monday, when we went beyond that and came back, it was very painful down there for those who were long. I understand that. But when we turned around, I told myself and said, "This is, guys, it." And we've got to get long. And we can't get long from the day before. You can only get long at the closing value, closing print. with time and Dodgers. So we got long that night, and that's our number. If you come here, take a look, you'll see that 41.55 was the close on May 2nd. Okay. So, this is a good guy. This is a good guy. Carter Worth, you should watch him. He's a good chartist. He knows this stuff. Yeah. Outside bar, don't forget, guys. Yeah, that's crucial. So, let's come back here. So, we got our divergence. We're cutting through the center line. Now, we got to step up with Momo. I'm not worried about, I'm saying not with Momo, with SP1. Momo did his job. Now I'm going to watch the SP1 itself. Got to step up in the Sigma levels. That's crucial. At least get to +2, 1.5 plus to that area. Then I don't want it to go to 3. The 3 is the rejection. It's gone too far. Okay, I want to keep it steady in the channel. So, anyhow, we did not make it to a 40, and we're down at 25. That's what his economist and his teaching. Yeah, exactly. Now, a friend of mine who runs the West Coast UBS said, I'm like to see if there's a test of 40 on VXN. We did have a 40 print, 4081. And that was on, I was talking to him on Sunday afternoon. So actually, intraday, we had a print of 4081. You see that? Yeah. But did not close above it. Close is very important. Mornings are for the mom and pops, the doctors, the dentists, the lawyers who are busy. Afternoons are for the closing, the last hour, the H hour. We call the H hour. That's for the professional. Hedge funds, pension funds, what have you, money managers. It did not go there. They reversed it. So pulled back, and now it's 31. So both of these say to us, and you see the cross there on the CIs, that balls are going to drop probably very fast. If the number of Friday is tame, you're going to see a massive drop at the cash open in the volatilities. That's the measure you want to watch. You can get these. Everybody has them. VIX is this is the old VIX protocol, the one that Dr. Valley did. As a matter of fact, old story, I had my VXN running before he had his, and his became SIBO. So way before SIBO had this is like economist from London, forget it. Way before SIBO had the data, mine was running, and of course his and I were matching. So we're good. This is the old VIX. This, I think, is a proper way of measuring volatility. It's not tradable, and it's not manipulatable. This one is. This is the new VIX, and I think SIBO did it for the members. Yeah. And it's just too much control in there. And it goes by not the nearest time and price. It goes with most popular strike. So one market maker or two can go and hit the one strike heavy, get volume goes up, it changes the calculation. So for me, that's not a pure vol calculation. It's not necessarily easy, but it can be done. So it opens the door. And by the way, this is all of S&P 500. The OVX, I think it was not OVX, not OVX, that's oil. VXO, yeah, VXO was what replaced. Used to be called VIX. That's the old VIX. That's what S&P 100. That's probably still a better one. Yeah. Actually, that's how I tested my put call ratio using the OVX calculations. Yeah. So long time ago, April 4th, 2000. So 22 years ago, this past month. Yeah. I knew I had something. I don't know if you guys remember or not. We dropped 700 points that day. 700 points in NASDAQ. That never happened before. And we closed negative 70. So it recovered 90% of the drop. Guess where the turn came? Where the put call turned. Yeah. Who verified it for me? What do you call it? I can borrow. Ralph, baby. Yeah. He was getting a copy of the report from one of the guys who was trading for him. I mean, that was part of a Prudential. That was one of my buddies, and he had sent it to him. And when he picked up the mic, came on their system, telling everybody, this is it, it matched by turn on the put call. So we knew we had something there. So anyhow, VIX, is this new? Oh, Murray. Is this new or no? Hold on, refresh. Let's make sure we have the latest data. Let's test it. Yeah, that's today. They're done. They're done. Panic covering of the panic selling of those puts that they were long. I don't know who bought it, but they bought it for a song. As this goes up like this, those who were long the puts down here become worthless. You can see it there. That kind of massive drop says the big boys just dumped the puts, dumped it, just give it away. Give me a. Not that they have an obligation. No, they just don't want to keep it on the books, and they don't want to pay attention to it. It's done. So we have a reversal. This tells me we have a reversal. Again, what did I said before? Let's see what happens. Let's see how the market as the news. Then let's see what the market reacts to that news. I'm of a school that says you have to cut your data many, many, many different ways. Okay. We asked for a rendezvous, we got one. Rendezvous was coming. Remember, this is very good for rendezvous. It's 3 stock RSIs with a different duration. So you get a very fast one, medium, and slow. But once you get your rendezvous, you go from one rendezvous to another rendezvous. Now we're heading up to the other side. Another divergence here. Very, very nice. Very, very nice. SP2, probably the oldest indicator I have. 95, 96, circa 95, 96, yeah. It's not been modified other than the colors. The color code, because it's a better trade session. Yeah. I did for Stan Harley, but he didn't really have this done right. He had some issues. He was, and I got my SOW, statement of work, was Excel sheet, and he couldn't explain to me very well why. So over the years, I may have touched it, but this is the last touch was before I did CI. So before 2002, yeah, I have not touched it since, other than color. So you can see the color code change because of the bias it changes. So we came to a green, retest, and then divergence, and went up. So next target is 75 area. We could be there by next Monday. We could be there by Friday close. Remember, these are bear market rallies. We're still in a bear market, guys. We are. Look at the moving averages. Okay, until that changes with the bear market. Bear market rallies are very, very hard. They rip your face. So don't be short down here. Probably today, if you were short, you will learn a very tough lesson. Okay. And then they're short-lived. You see, remember this? With no volume, what's crucial here is now go back to study volume. I'll do it tonight later on. Because this was no volume there. What did I say? I'm not getting long. No. Getting long here is for the kids. And I have a few friends who've done that. The cigar bar on the Robin Hood. Boy, were they bleeding here. They were just really, I mean, I saw one of them Friday night. I've never seen him so white. He's a Roman, but his face, I've never seen one. I mean, it was scary. Scary. He was like, no blood in his face. Yeah. No, he's technically a white boy, but I've never seen him so white. Because he just gone through so bad. And over the 50 bar, he had gone, 200 bar had gone long. This is a cross. This is a death cross. Why did you go long here? I don't know. He mumbled something. Anyhow. All right, let's see what we have here, guys. I got to check. As you know, I always check because I make mistakes because I'm always time bankrupt. Okay. We're good. We're still in the May. We're way before the expiration, so May, August are correct. Long May, short August. This is the VX setup. Are we on? Okay, no, we still, and the contract, oil contract is CLM. Okay, that's fine. Yeah, that's fine. Okay, so looking here, we did what, 1.7. You know, that was a big peak there. We did about 2.5 positive. Yeah. See, this should be around 0 technically. Okay, so we should really put a delta in of 2.5. Now, why is that? It's pandemic. When we got to pandemic, all the VIX structure went bad, and so that it was more pessimistic than before. So I'll work on that. Matter of fact, I'm sure in New York that's one of the questions they're going to ask me. This is one of their favorites. Yeah. So, but I'll work on that to get some parametric equations done. I'm not sure it's going to be 2.5. I need to find out what that is. But you can only do it empirically. You have to use data. So we'll do that. Just like I don't have anything else to do, right? I don't have enough to do. Let me do this too. So listen, I still have to recast the OTF. That's a major task. Yeah. I'll do it when I get back. I can't do it this weekend. No way. Because I leave on Tuesday. But I get back next weekend. I'll do that. All right, let's go to one of my favorite charts with one of these, a couple of cocky real estate investors down here that they said that, we have a shortage and things are going to be very tight. I don't think so. You remember 2008? Yeah. We were 4 million short on rentals. I understand that. But anything that goes up like this has to come back down. They have no choice. Why? Rent is one of the key inputs into CPI, PPI calculations. They're going to be on their face. And if anything, you heard what Gundlach said today? The bond king, the one who replaced Bill Gross. He said they came in today, the Fed came in to recover their respect in the society, to make sure that they show that they're in charge and they mean business, and they're going to control inflation. They have to. They have no other choice. Part of the problem is that they didn't tell you is the interest debt. We have so much debt now. Look what we have done last 5-6 years. Yeah, the debt has exploded. So they cannot afford the rates to go up. I mean, we will bust the budget. We're going to lose a lot of money for the social network, social safety net, and also for defense. Basically, we're going to be paying interest. That's not going to be it. So they're going to be very tough. Now, we did pull back, but look where the interest rates are at threes on a 10-year. So you add your 1 point to 2 point for a spread for the mortgages, and then the Fed is talking about another 150 to 200 basis points. So the rate mortgages could hit 5. No, let's say 6, 6.5. That's going to be a different market in real estate. And that's probably good. What are we doing going up 50% a year? For what? You have to bring it down. You got to make it affordable. Yeah. You can't have people paying half their income for rent. It's not going to work. So you can have other social negativity come to the picture. So they have to, and they will. Remember, I come from an attitude of the system. I believe in the system, and I believe the system is strong enough to manage it. I'm a product of the system. So obviously I believe in it. So when people just throw in all kinds of negativity, I go back to my own cubicle, my own cocoon, and say, we have a very robust workplace, tremendous technology, a lot of capital, and we have always fought back. We've always survived and come forward. To us, it's being an American is that you accept some challenges. Things are not going to be easy when you're number one. They're always going to throw stones at you. But that's being number one means. And to me, that's okay. We can do that. That's a good challenge. My mom always told me, says, hey, hotshot, let's see how good you are here. And she meant that. She would always challenge me. So you got to push yourself. The country will. You got to be confident. We're going to have some problems, but the system cleans itself. It will. And this is one of the processes we're in. Some cleaning that's needed. I suspect the low around July 4th. And that's when you want to buy. I'm not saying we're going to rally up heavy or dump here. I think this is a transition period. And I would be worried about the last interest rate raise. That's going to be always a tough one. If you again read Marty Zwick, the last one was always the worst. It's a damage. Early on, not really. Actually showed things are doing good. Also, keep in mind, historically, we had very low absolute values of interest rates. Okay? The only problem here is that we have so much more debt. So much more debt. And just to service that, we can't default. We're not Russia. We cannot default. So And we have cooler heads in Washington. They have to keep this crazy. At least I know they spend more. I realize that. I'm no Biden fan, but there's no playing game with the debt because we can't do it. Like before, they didn't understand it. It was beyond their IQ. They understand now they can't do that, and so the rates. We're not going to near a default, but we will have to be tightening our belts and bring the rates down. Otherwise, the biggest victim is going to be the budget. The budget is going to bloom. I've always said that. Now more true than ever because now the base is bigger. Okay, let's see what else. Okay, Larry. Again, I would yield to Nordstrom on this. Go Natvik, but I'm not seeing 90% down here. We never crossed it. We touched it and pulled back. And we never went from 90 to plus 90. Now he's looking for tomorrow, possibly going there. We'll see. More likely Friday probably, because tomorrow's going to be necessarily quiet again. It's going to be a little quiet period before the non-farm. If he gets to 90, then he calls that a follow-through day for how Can Slim operates. What do you call it? The IBD. We're long. We're going to keep staying long a little bit and for the next few days, for maybe another week or so at minimum. It's going to be a rush up on the long side. Once we get past, let's say, give me a number here. Give me a number. Let's say 4,400. Yeah, 4,450. I'm going to be careful now because then it comes a test of 200 day. Then I have to make a decision: do I lock this and step aside or not? You know what Rothschild said? He said, "I always go in late. I always get out early." Why? Because he doesn't worry about up tops and bottoms. He just wants to get the 70% of the juice in between. So that's what I'll try to do. One more chart and I'll take your questions. What time is it? 5:55. Oh, I got 5 minutes. Okay. Last question. Last chart. I'm sorry. Okay. No, I did not buy gold. This always, if you do anything, this picks it up, huh? No, I did not buy gold. Are you kidding me? Gold has been getting his ass kicked. All right. What did we talk about last time? Do you guys remember? I said a test of 35 based on this. It hit it yesterday. I pulled back up. So is that the latest? May 3? No, hold on. Let's refresh. May 4th. There you go. Yes, exactly. Went to 35 area and pulled up. Now, look at again. As I said, with this chart, I learned over the hard way and over a long period of time. You got to look at what these two moving averages are doing. That shape. That's far more crucial than anything else. So they're still on the downside. There's still on a chance to the price come up and hit the moving average, get sold. And we may see that, but I think my guess with you right now, they'll do more like this. They'll punch through and then pull back. So that's my presentation. We're going to stay long. We'll put a trade on for the members, and we will get, of course, emails out saying, of course, Admiral Tico does. As you know, he does this variety of charts for you guys. Let me see. Let me give you a little boom. Where is it? Where is Admiral Tico? So you know what to look for. No, not this one. Okay. Okay. So let's see. Where do we go? There we go. You know his typical emails, and each email has a different picture of him, so you don't get confused. Okay. More power to him. Later on tonight, he's getting a lamb kebab for dinner because he's done so well. Question here, Michael Becker. Do you think NDX will outperform the SPX? Yes, sir. It should. It is high beta names. You can already see it. Look at just the. Don't look at the height. That's one thing, but look at the shape and look at it with the outside bar versus the day before. It was even. That means it was lower first and then closed higher, right? That's what that bar means. So yes, NDX because it's got more higher beta names in it. Theoretically, it should. If one day it doesn't, it's not the end of the world. But over a time period of time, statistically, yes, sir. Any other questions, guys? I have a couple more minutes. Hey, Alex, I'm sorry about that issue. Thank you for pointing that out to Matt. There was a problem on our end. We had a problem with the server. I'm sorry, they did. We forgot to renew on our server the new login or the new website location. Not that you're in, you're okay for the future updates of it. So it just was something we didn't expect to happen. Hey Frank, how are you, sir? So my apologies there. Any other questions for me? As you know, this is being recorded. It, as always, will be posted. It's on our YouTube channel. How do you go there? It's the first link. Come on, there we go. Sorry, he's got too many monitors here. Here, our videos. If you click there, it goes to YouTube channel and gets posted right here. Okay. We mainly post market timing stuff, but occasionally get something unusual. Let's say Q&A. We'll put it up there. We do have one we need to put up. It was huge. I'm debating whether I have time to edit it or not, because I also had some trades in the morning there too, but I can always add it. We'll see. If I can, I'll put that there as is. Okay? Now, next week, there won't be no webinar. So, because I won't be, my hands will be tied. I'll be in New York, busy. But I would say, come here. If you're already in this room, you'll get, these dates will change. And of course, you get reminded. But looks like 18th would be our next market timing webinar. There's a comment from a person saying, as a member, why are we doing these openly? Maybe we reduce the number of these, and then do members only. I understand that. This is our loss leader as a product. I've tried to do this more as a giveaway, as a give back, as a give. We won't give the trades out, but we do give some of the commentary. I've been very fortunate. I feel obligated to return some to those folks who helped me get here. Some of you guys were there, of course. This has been a long journey, 20 years. So I just feel that I should give back some to everybody out there, especially the younger generation, the newer traders, where they need the help the most. So remember, there are 25 million people in this market that did not have a trading account 2 years ago. You know why? Because we gave them PPP money. Yeah. They went into real estate and they went to Robinhood. And I think between now and most likely 4th of July, Goldman and Morgan will make sure that they lose that money. Yeah. Are you telling me these big banks will allow you to keep that kind of money? And you got keep making money on free money? No. Not going to happen. That's not capitalism that I know. So, welcome to America. Exactly. Last question. Tom, I call it the way I see it. I don't please everybody, but I'm not running for an office, so I try, Frank. I try. I actually give a little bit extra to the Romans. You know why, right? Because the Persians kicked their ass. So I feel the partially victim. So I got to help them more. Just read the Battle of Odessa. Not Odessa. Edessa. Is it Edessa? I forgot. I got to look it up. In 260 AD. Yeah. My pleasure. That's it. By the way, Colette, I've learned a lot from you guys. Also, it shows all my mistakes. Look what Alex did today. He tried to come in, he couldn't get in. So he writes to my assistant saying, I can't get in, what's wrong? And he's yelling at me like, Fatty, what do we do now? I said, calm down, we're going to find out what's wrong. And I went through our record with the go to webinar. They fixed us. They fixed the setup. We did not upload our page properly. So we fixed it. So it's always good to interact. Trading is a very lonely business. It's easily you can get into your cocoon and never see what's going on out there. And it's becomes very boring. So yes. It's called Frank. That's called tough love. Yeah, exactly. But anyhow, long story short is It allows us to have an outlet to interact. These days I couldn't trade without a chat room. Trust me, I can't. Because these guys save my rear end constantly. They see things I don't see. That's important. Things are getting so complicated now, you can't do this alone. That's what I've come to believe. So, as much as sometimes I get aggravated with the chat room, but at the end, at the sum, it's positive. Yeah. Guys, I got to run. It's 6:05. I'm sorry, I've got a consultant stopping by, and I need to be ready. Thank you all for attending. We'll see you in 2 weeks. I'll post the webinar the moment it's ready. We appreciate it. Thanks at the same time. See you all in 2 weeks. Wish me luck next week. I'm up against some of the best and the brightest. And they won't be easy on me, trust me. So, good night, all.